Mike Arnold, co-founder, Pat Trading Partners, along with Bob Agino. Starting on Tesla, the daily chart, textbook example of a rotation back up. So this is what you're watching for. We closed above the rotation zone, right into it. Then today we started rallying up and getting right above the 8, stopping at a prior Gann level, the 25% retracement from this up move. So that's the kind of thing you're looking for, because then you can easily place a stop just below the this low that spiked through the rotation zone. Again, we're not giving trading advice, just showing people how to then define risk. So because if this rotation does not hold, it would be a failed rotation up, and then we'd start watching for an even bigger pullback. So the most logical place to put the stop, it would be below this low. And again, that's no guarantee that this rotation will work out, or any rotation will work out. This is a pattern we've been following for a very long time, and it's a very reliable one. So we still have a gap fill. Let me drop to the 4-hour. We never got the first cross the rotation zone. We're back above the rotation zone on the 4-hour. We're going to be watching for is if we get above this 764 level. We still have this gap fill which wasn't fully closed, so we'll start watching for a move to the closing price of 781.06. So that would be our next target, and then above that we'd start targeting the 816 level again. Not an overbought or oversold, no selling patterns there. Lower volume today on this rally. That was the only drawback compared to the two big selling days of last week. If we did drop below Friday's low right here, then we'd start watching as the 50-day exponential moving average comes in with the 658 level, and we still have this unfilled gap over here. So those are going to be our next target areas, with the full target eventually being the closing price of 654. That's everything we're watching on Tesla, and we'll talk to everyone soon. Bye for now.